The biggest financial question of your life is one no economist, no pension expert, not even the pensions minister can fully answer. How much do I need to retire? And the brutal truth, no one can tell you your retirement number. But today, I'm going to show you how you can find it. This video will be split into 5 sections, and the intention is to get you thinking about retirement and potential early retirement. Section 1, the 3 questions to ask first. These questions will determine your retirement outcome, and they are: when are you going to start saving? How much are you going to save? And when do you plan on retiring? A lot of people I know in their 30s and even 40s are not thinking too much about retirement, and most of them are not investing into assets. If you understand the current financial system, like how bad inflation is, if you understand things like compound interest, my opinion is that you will very likely invest. If you want help with these initial questions, if you want one-to-one support, type yes below and you can join my investing community on School. Most people, like me in my 20s, will jump straight into individual stocks and lose some or all of their money, like I did in 2011. But after 24 years of investing and learning how to invest the hard way, I'll tell you this: if I could go back and have a little word with my 18-year-old self, I would be telling myself to start investing in the stock market with low-cost index funds. The biggest difference maker to build wealth, when you look into it, when you read the books, is time. Because if you can invest long-term, compound interest will do most of the work. Section 2, why retire at 65 makes no sense anymore. Most people I know think of retiring at 65 or maybe even later. This is something I've heard for the last 25 years since I started work in the Royal Air Force. But this way of retirement thinking is very outdated. This was decades ago, when people didn't live as long, jobs were more physical, and retirement was seen as the final chapter. Today, you might live 30 to 40 years after retiring because of technology and advances in medicine. Work is less physical, more flexible, and many retirees want to keep contributing in some way or another. I know too many people who are struggling in retirement, but I also know people who retired then unretired themselves because they got bored or because they discovered how rubbish daytime telly was. Personally, I couldn't think of anything worse than retiring and spending most of my day watching daytime telly. For me, working a couple of days a week in your late 60s isn't a failure. It's something I would genuinely consider. It buys you more growth on your money, fewer years drawn down, and bonus, more purpose. For me, early retirement is more about choice, like not having to work. If you want a bit of help so you can invest and potentially retire early, hit subscribe so we can build wealth together. Section 3, withdrawal rates and savings rates. Let's talk about that famous 4% rule. I'm going to tell you what other YouTubers seem to think of it. People like me try to make sense of money and investing. They think it's helpful, yes, in the same way Google Maps is helpful if every road never changes. But real life changes, markets wobble, inflation is effing brutal. I just get the impression people don't like it. Personally, I do like it for its simplicity. It's a good place to start, and it gets investors thinking about their retirement. We'll get more into this in section 5 when we look at finding your retirement number. Something else to think about, which is equally as important, is your safe savings rate. Some people need 10% of their income saved, some need 20%, some, especially late starters, might need even more. I think 10% is a good place to start, and as time goes by, you can increase the percentage of your savings rate. This is after you've got a bit of experience and confidence investing in the markets, and maybe when you get a little pay increase at work as the years go by. A key part of investing and retirement is working out how much you can invest each month. Even £100 per month will turn into a huge amount of money if you invest long term. The more you invest, the better. But like I said in section 1, the biggest effect on your wealth is how long you can invest for. Time in the market is so important. If I was financially educated as an 18-year-old, I would have invested £500 every single month for 24 years. And that would have got me £592,000. And that's just from index funds, not taking into account property, individual stocks, or even crypto. I use examples like this all the time to drive home the importance of investing. As you can probably guess, I'm not a financial advisor, and this isn't me giving out financial advice. I'm not an expert, not even close, but I am sick of seeing people I care about struggling financially, and my intention is to help as many people as possible with my experience. Section 4, if you're young and if you're a bit older and feel behind. If you're young, you own the most powerful financial asset that exists, years. Yes, I've said it again, I've mentioned the importance of time as an investor because it bears repeating. Every pound you save in your 20s works harder than any pound you'll ever save in your 40s. Yes, I'm gutted I didn't continue investing when I started as a clueless 18-year-old. I invested £500 a month in my stocks and shares ISA for 6 months, then spent it all on a lad's holiday. The thing is, I didn't know any better, so I've just got to make the most of investing as a 42-year-old and try and help people with my many lessons learned. If you feel behind, you're not. Peak earnings years, late 40s and 50s are the comeback years. And if this is you, I'm with you. You can spend time thinking of what could have been if only you were taught about investing at school or by your parents, or you can pull your finger out and do something about it now. Like me when I was 35, when I finally took the time to learn all about money and investing. I read 50 odd books in about 6 months and started investing in low-cost index funds in mid-2019. Let me know below if you're already an investor or thinking about investing. Section 5, how to find your retirement number using the 4% rule. Let's talk about something most people never actually sit down and calculate: your retirement number. Not how much you hope to have, not what you think might be enough, but the actual amount of money that can fund your lifestyle without you running out. And here's the good news. The maths is simple. The strategy is simple, and anyone can do it. It all starts with the 4% rule. What is the 4% rule? The 4% rule is a guideline used by financial planners and investors. It says that if you build a diversified investment portfolio, you can withdraw 4% of it every single year, adjusted for inflation, and statistically never run out of money over a 30-year retirement. That means if you want £20,000 per year, you need about 500,000 invested. If you want 30,000 per year, you need about 750,000 invested. If you want 40,000 per year, you need about £1 million invested. It's really simple to work out. Annual income goal times 25 equals your retirement number. Example 1, investing £500 per month for 30 years. Now let's look at a real example. If you invest £500 per month into a global index fund and it grows at an average rate of 10% per year, which is roughly what the global stock market has delivered historically, you end up with just over £1 million after 30 years. £1 million from just £500 a month, all thanks to time, compounding and consistency. Unfortunately, most people don't have the discipline or patience to invest long term, and most people won't retire early, if at all. Now apply the 4% rule. 4% of £1 million equals £40,000 per year. That means your investments could pay you 40k per year for life without needing to work and without touching the principal. That's a retirement salary paid by your portfolio. Example 2, even smaller amount add up. Maybe you're not at £500 a month yet. That's okay, all good. If you invest £250 per month for 30 years at 10%, you end up with about 500,000. 4% of that equals 20,000 per year. For some people, that's enough to cover the basics. For others, it's a huge supplement to their state pension. The point is, you don't need to be rich to retire well. You just need to start early and stay consistent. Summary: you don't need to guess your retirement future. You can calculate it, you can plan it, and you can build it one monthly investment at a time. Your retirement number isn't random, it's a formula. And once you know the number, you can reverse engineer your entire financial plan around it. But what if you're just starting and you're not sure how to invest or what to invest into? If you see below, you'll find my latest playlist, basically 5 10-minute videos that will help you step by step to invest in the stock market with low-cost index funds so you can potentially retire early.